Hello, everybody. Welcome to Monday. The S&P 500 was up 1.2% today. A really strong day, actually. Lots of green that I saw in the different symbols and whatnot that I'm watching. And really, again, just to reemphasize, I spent a lot of time looking at primary direction. And really, the primary direction of the market, we want to pay attention to that. And the other moves are the minor moves. So last year, the primary direction was down. We could see that. So every time it jumped up, it was really a minor move until finally we hit a bottom in the middle of October. And we started to see a change in primary direction early this year. And so we have a primary upward directed market right now, even though the market's been coming down since the end of July. All of the little rules that I follow for what makes a primary direction are still intact for this upward move. And it's not surprising really to me at all that we've come back down into the support level, especially since we had such a huge run up from May until the end of July, really based on, I think, some short covering and some hype about the artificial intelligence that was really kicked off by the earnings report from NVIDIA for the first quarter. So earnings reports are still coming out this week. They continue to do quite well, in my opinion. I think earnings are doing a lot better than they're getting pressed for. I think the Israel situation has kind of clouded, what's happening here. We had a great GDP report. Unfortunately, a great GDP report can be a negative in an inflationary environment. So I think the keys to watch for, things that are going to affect the decisions for the Federal Reserve, which really have to do with, are we softening up on the economy enough to let inflation come down, or is it getting too hot? Because, right now inflation has been going in the right direction. When we watch core inflation, really since June of last year, it's been slowly but surely coming down in all of the different measures of core inflation. But the fear is that, the economy gets too hot, that could go. And of course, the situation in Israel really seems to be having an impact. You can see it on kind of the minute by minute charts, when there's certain news released and what have you, that the market does care about that conflict, rightfully so. And apparently, the things that are happening right now are a little bit less than what was expected. So the market has responded positively to that. The price of oil came down 3-4% today, which is really good for inflation. So that's a really positive piece of this. So that's why we're seeing good markets here, bounce off support, oil drops. Situation in Israel is a little bit better than was expected. And so now, does this continue? I'd love to see a couple days to the upside to kind of get some motion going. Again, I've always said that these things start to turn around when you get enough motion to get these shorts, people that are shorting the market, to cover their shorts. They have to buy stuff back. That gets more motion, and then people start jumping in and what have you too. So we haven't had that yet. The last little bounce that we had started October 3rd, didn't hold up, mainly didn't have the volume. And so we'll watch for the volume this time, see if we get some motion here too. So anyway, that's what's going on right now. Look forward to being able to see what's going to happen tomorrow. Really looking forward to seeing hopefully some, better returns this week, even though there's a lot going on with the Fed meeting and all these earnings reports, job report, all these things are happening, but they could be good things. So let's see what happens here. So look forward to talking to you tomorrow. Thank you very much.